Wall Street is an amazing thing. You can make so much money on stocks, the next day be a millionaire, and then a week from then, make some bad investments and lose it all. We're actually going to be going over some of the richest people on Wall Street. Unfortunately, they are all males. There were a few females, but a couple of them dropped out of the list not too long ago. So it's a pretty equal street on Wall Street, no pun intended. But these people have made their money dramatically increase within the past few years just off investing simple stocks. They also do coin-based cryptocurrency on the side, so it definitely evens out, and it's safe to assume that there are going to be no cheapskates on this list. What's going on, guys? JT here with the Business Hub, coming at you with another video. Make sure before today's video loads up to leave a huge thumbs up on it. Also, let us know in the comment section down below that if you did subscribe, you make sure you comment down below saying you subscribed, hit that subscription bell, and turn our post bell notifications on. Guys, I cannot stress this to you enough. If you want to be shouted out in the videos, do this. You increase your chances with every video you comment on and leave a like. So go ahead, ring it up. Now, let's get into today's video, the 10 richest men on Wall Street. Coming in at our first spot, we have John Paulson. Unlike most people, Paulson had benefited from the mortgage crisis. Back in 2006, when Obama was in office, it was President Bush. I apologize, but he ended up, not doing too well with the crisis, increasing taxes, and everything went to hell from there. He was already actually predicting the crash of the housing market. That's how smart Paulson is. He can predict these type of things happening. He created 2 hedge funds dedicated to betting against subprime mortgages. His forward thinking has led his company to perform at the top since 2007. He posted $5 billion in returns in 2010. Paulson is considered to be actually the #1 investor of all time on Wall Street. He formed his own hedge fund in 1994, leaving behind a career as a banker for Bear Stearns. Now, as a banker, he was making $600,000 plus a year. As a hedge fund investor, it's quite awesome to see how much these dudes make because there's really no steady number. However, Paulson, I'd estimate, makes a couple billion a year just off hedge funds. Now, the dude is literally living in New York, living the life, every day going to work and just working hedge funds. I mean, if you find something like that and you enjoy working with math and numbers, you enjoy reading the markets, predicting what's going to happen, studying the history of it, go for it. That's all you. But Paulson has definitely found his true passion in subprime mortgages. How subprime mortgages work is you find a mortgage, and once it's past its actual prime, like its actual start date, the house's value actually deteriorates a little bit with more of the value and damage. What he does is he'll find these houses, build them right back up, renovate them, and then put them back at their original price for half the cost. It's quite amazing to see, and this dude literally doubles his profits. No wonder he's a billionaire. Next, we have probably the most famous one, Warren Buffett. In 2008, Buffett was the richest man in the world with a net worth of $62.5 billion. Now, he's actually the 4th richest person behind Mr. Bezos at #1. Bezos is worth $102 million, but that is definitely going to double this year as Amazon is just looking to increase its market space and its production value. Buffett was demoted to 2nd place in 2009 when his company, Berkshire Hathaway, lost about $25 billion in the span of a year. He was at #3 by 2010, outdone by Carlos Slim Helou and Bill Gates, even though his investments were up $10 billion. Despite that slight downturn in fortune, he's still considered one of the greatest investors of all time. His nickname is the Oracle of Omaha, in reference to his Nebraska hometown and his insightful investment choices, such as not putting money into an initial internet boom. This dude is honestly super old school. He will only invest in what he believes in, and if it has anything to do with anything technologically advanced, he's not going to invest in it. He just doesn't even bother wasting his time. It's cool to see dudes like this still exist because personally, I'm an internet kid. I was born in the 90s. I love the internet. I love how awesome it is. You can make so much money on it. You can lose a lot of money on it also, but you could also connect to people you never thought you'd be able to connect to through it. Upcoming, we have James Simmons. This mathematician turned hedge fund manager is worth $10.6 billion in 2011. That was just in 2011. He's therefore doubled his account by then. He founded the hedge fund Renaissance Technologies Incorporated in the early 80s after teaching at Harvard, cracking codes for the U.S. Defense Department, and earning a PhD from UC Berkeley. The key to his success has been and led to him using trading algorithms and computers to determine the best investments. He stepped down from day-to-day operations at Renaissance in 2009, but at 72, Simmons keeps busy by devoting his time to supporting autism research and providing stipends to the New York City math teachers through his Math for America nonprofit organization. For real, this dude literally used to be a teacher, and back in the day, professors still made a good amount of money, but it wasn't as much as professors make today. For example, I actually go to a little D2 school up in Pennsylvania, and I found out a bunch of professors there, depends on how long they've been there, but the starting salary there is close to $100,000. That's literally insane. You can literally live off that. They pay for your housing, all that stuff. And Simmons is giving back to these teachers. He knows the pain it feels. That's why he's giving these stipends out to them, making sure he can invest in them and making sure that they are always leading the future for today's America. Lastly, we have Ray Dalio. Ray Dalio, whatever you want to call him. He has a weird last name. However, this 61-year-old is the founder and CEO and CIO of Bridgewater Associates, the world's largest hedge fund. Many credit his untraditional management approach, which calls for complete honesty, accountability, and transparency from himself and all his other employees as a secret to success. Dude is a completely trustworthy guy. He made a personal profit of $3 million in 2010 with his company, posting a 45% return on investments for a $15 million windfall. Dalio made his first investment at age 12, investing $300 into the stock of Northeast Airlines. The no-nonsense hedge fund manager has an MBA from the Harvard Business School. A lot of these guys we went over today have all went to Harvard. Well, except for Warren Buffett, who didn't really go to school. However, you don't have to go to school to be successful. These dudes are literally living proof of it. Half of the hedge fund investors today and a bunch of people on Wall Street are actually very, very smart at investing, to where the point when they were in school, they didn't even need it. And to be honest, school isn't always a bad thing, but college, in my opinion, and a bunch of other people's opinions, you don't need it to be successful in life. Just take these guys, for example. So guys, that's it for today's video. I hope you enjoyed it. Make sure to leave a like, comment, and subscribe. Also, let us know in the comment section down below who your favorite investor is and why. I'd love to see some of these comments after this video. There are a ton of investors that people idolize, and a lot of them don't really know their backstories. So guys, this is JT with the Business Hub signing off, and as always, see you guys later.